Hey guys, welcome back. Patrick here with your midweek SPAC price and news update. We have a lot to cover this week, so it's going to be pretty interesting. Do me a favor, if you haven't liked and subscribed, please do so now, and we'll get started right now. All right, so let's start with OPES, BurgerFI. As you guys know, it's my favorite stock to pick on, and boy, did they give us some laughing material this week with the conference call. We'll get to that in a minute, but first, let's just quickly look at the price action for the last couple of days and see how we're doing with this stock. So there was a pretty nice dip over here on the 31st and actually went oversold on RSI. And then there was a cross on MACD, and now we had a pretty nice little uptick. Well, what's that from? Well, there was this conference call this week, and people had high expectations that they were going to address the delisting issue or talk about the shareholder meeting to actually have the merger. But since the conference call didn't happen, look, we're back on a little downtrend. So please don't fall for the hype. You see posts on online like this: OPS rise to glory starts now. The guy looks at the hourly chart, sees a little uptick, and now we're going for glory. I mean, come on, look at this crap. I mean, it's ridiculous. Look, we're back on a little downtrend, and if you look at the longer chart, we're in a huge downtrend. It's going to take more than 1 hour uptick for us to be able to say that we broke that downtrend. So don't fall for that hype like that. Like, look at the chart yourself. I mean, it's pretty obvious that it's going to take more than one update for us to break that downtrend. All right. So I have to be honest with you guys. I'm now part of the bag holder club for this stock. I actually bought 500 warrants on the 31st at that low. So if you've seen my previous video about how to buy low and sell high, that's exactly what I did. I looked at it. I managed to buy it right around here, 12.50. I actually got it for 140. So often it doesn't really matter necessarily which stock you're buying. What matters is the timing. If you can hit the low, well, then you're going to get a pretty nice uptick. I mean, just today I was up 130. Total gain so far 280 in a few days. 15% gain today. So if you time it properly, even though it's not my favorite stock, right? If you time it properly, there's money to be made. So if you haven't seen my previous video, go look at it. It's going to help you long term. But about the news. So there was this conference call and it was a disaster. I mean, I tried to get on it and you couldn't hear anything the lady was saying. Their phone system kept repeating that people were coming into the call. Then you had the idiots that were swearing. So it was just a disaster. So they're actually rescheduling it for this Friday at 10 a.m. I'm going to link it in the description if you guys want to read the press release and if you want to connect so you can listen to it. So 10 a.m. this Friday to elect James Henderson to serve on the board of directors and then to transact any other business as may properly be presented at the annual meeting or any adjournment thereof. So I'm not sure exactly what they'll be talking about, but there might be more than just the board of directors. We'll see. And let's close out with some good news. They're actually opening a restaurant in Henderson, Nevada, which is a pretty good market. So that's a kind of nice change of pace because they have a lot of stores that are temporarily closed, but now they're actually following through on their execution plan where they're supposed to be opening 100 new locations. So +1 for BurgerFI, that's good news. And we'll see if Friday there's any significant news and update. And if so, I'll let you guys know. And now we've got SPAQ, Fisker, which had a pretty interesting week. I think you guys might be a little bit worried, and I understand that a lot of you probably have exposure to it too, because I was surprised, but it's the #1 owned blank check company on Robinhood right now. So what's been going on in the past few days? Well, first, we had a pretty nice little run up over here, which was explained by they had some decent press, right? They announced that they had 7,062 reservations for their Ocean SUV in 30 different countries. And also, they announced that they were going to make 4 different electric vehicles by 2025. So that was pretty interesting, right? Because they weren't just limited to one model. But after that, it kind of went downhill from there, as you can see from the chart, which is now below support. Guys, Fisker is not doing that well right now. Basically, what's going on is they were looking to get into an agreement with Volkswagen by July 2020 for some OEM parts. A lot of the vehicles are based on the same infrastructure, right? And some companies get parts from the same providers. So in this case, they were going to use the same architecture as these models from Volkswagen. So the ID4 and Audi Q4 e-tron. But they weren't able to get into that agreement yet. So that gives us a little bit of a fear that there might be delays in production. They're still talking with Volkswagen, so at some point they might get into an agreement. But the good news is that they're also talking with other top tier providers. So it's not just Volkswagen. If they can find a replacement, we should be okay. But for now, I mean, you can tell that people are a little bit worried about it, rightfully, because if they can't get that agreement, it's going to delay the production, and who knows, maybe the merger won't even go through if this isn't in place, because people need to know that the vehicles are actually going to be produced. On the other end, we've got some good news. They actually got a 6-month extension on the merger, so they only had until August 14th, 2020 to complete the merger, but shareholders voted to extend it by 6 months, so now they have until February 14th, 2021. So what do you do about SPAQ? Well, if you're holding it right now, you're kind of in a tough spot, because if you bought it like when it was more expensive, you're kind of stuck with it. Thankfully, you have that floor at $10, which is what the money that they have in trust. But the prospect of it going up right now until they announce another partnership for the OEM parts, it's probably not going to get up too much. So if you guys are really hopeful about it, maybe you can open a position, but personally, I wouldn't touch it until they find a partnership. When that happens, might be a good play, but for now, like, be very cautious. Next up, we've got DiamondPeak Holdings Corp, DPHC. Very interesting company. I'm going to be making a full review tomorrow, but guess what, guys? We got another electric vehicle company coming to the market. Yeah, another fad company. But in this case, it's actually pretty interesting. They're going to be merging with Lordstown Motors, right? Which, if you don't know, is a company that's an offshoot of Workhorse. Workhorse is a company that makes last mile delivery vehicles for companies like UPS, and now they're trying to get a $6 billion contract from USPS. So it's a company that has a lot of potential, and Lordstown has a lot of same intellectual property that they gained from Workhorse, being an offshoot of it. So this company is interesting, but of course, be very careful about the stock. Don't fall for the hype. As usual, we've talked about this many times. Right now, it only popped to $15, which is not that much if you consider that it's an electric vehicle, right? And we'll know that in the next few months, it's probably going to drop back down. It already dropped down to 12.55. It's probably going to drop down below 11 like SPAQ. So if you guys are into this company, you're going to be able to pick it up cheaper later. So just don't fall for the hype, wait for the bottom, and then you'll be able to pick up shares. But this company has a lot of potential, and I'm going to be talking about it tomorrow. So look out for that. It has really interesting characteristics. Ah, the tattooed chef. Well, I still don't really get the Tattooed Chef brand, but I do like FMCI. It's one of my sleeper picks. So if you guys are interested in getting more of a detailed review for this company, please leave it in the comments. I'd like to know what you guys want to see. But let's talk about this company a little bit. If you notice the trend in the charts, it's on a downward trend, like a lot of the other SPACs, right? It keeps making it keeps making lower highs and lower lows. So if you were to draw lines, it would be going down like this and like this. So you can see that it's on a downward trend. So until this stops, I mean, you probably don't want to open your position now, or you want to wait until one of the lows. I have a small position right now, but I'm not expecting too much until they actually announce the date for the merger, like the shareholder meeting. So, we'll want to wait until it actually breaks this trend until we actually go big on this one. but I actually like it. And the reason why it has nice momentum and it keeps going up sometimes, it has pretty good press. As if you look at some of their press releases for the period ending June 30th, they announced that they had for year over year, like that period, they had a 97% increase in their revenues to a record 65.2 million. That's pretty good, right? So that means that during the pandemic, they're actually doing very well. While people are eating at home more than usual and going to the restaurant less, they're doing well, and they're also in a sector that's growing. That type of food, people want more of it, right? So it's not in a sector that's shrinking. So that goes in their favor. They also have pretty good distribution. So this is one of my sleeper picks. Let me know if you guys are interested in learning more about this company. But for now, if you want to open your position, I'd wait until there's a pretty strong reversal. And in the close, I wanted to briefly talk about warrants and the newer SPACs. Guys, I want you to be really careful. We're in a tough period right now with the SPACs. I'll be honest with you, I analyze this stuff every day. And what I can tell you is that the SPACs are a little bit thin right now. By thin, I mean they're kind of weak. There's not a lot of support for them. The market is too stretched out. First of all, we're in an economic cycle where there's a lot more choppiness, right? In March to June, it was straight up. Now it goes up and it goes down. So there's not as much strength in the market as there was before. But also, if you look at JWS, this is a company where I had 600 shares before, warrants, sorry. I had 600 warrants, and they were very stable in the 220 to 230 range. There was a rumor which brought it up to $3, but when that rumor didn't happen, it actually went down below $2 to 185. So you're like, well, okay, it just might be one case. But no, if you look at WPF, another company that people had high expectations for, management team that's experienced and has had deals before, it was stable in the 220 to 260 range, and now it's down under $2. It went as low as 160. Wow, that's pretty low. So you get my point, right? In general, the market's a little bit stretched out because of all the SPACs that are coming out there. Like there's 3 or 4 new ones every day. So the market's a little bit thinner. So you want to look for companies that have strong management teams, strong SPACs, but even then, it's not always like a guarantee of success. If you look at Churchill Capital Corp 4, they've done 3 SPACs before. Michael Klein, I believe his name is. They've done the first one, they got a deal. Second one is still out. And third one, CCXX, they got a deal with Multiplan. I know that people are worried about CCXX because there's rumors of dilution, right? But if you look at how close it is to the IPO price. The floor technically is almost $10, right? Before the merger, now we're at $10.24. There's no momentum to them. Look at the units for these ones, $10, which is the IPO price after a few days. The investors aren't even giving a premium in the unit for the warrants that are attached to it. So there's just not that same momentum that there was like in March, April, and May, when any new SPAC that was announced had pretty good momentum. The warrants were going up, like JWS, WPF, right? And if they announced that LOI, went sky high, then it dropped, and then you could expect a nice pop. Times are changing right now, so be very careful. You want to get SPACs that are strong and solid and are actually going to have some excitement to them. Now, interesting, Robinhood has a nice page where you can see all of the blank check companies. Look at how many there is right now, 142. So that's a lot of companies are fighting over the same number of same companies, right? Because most of these are in the 100 to 500 million range. There's only Churchill Capital 4, I believe, and at 1.8 billion, and then you have Bill Ackman up to 7 billion. But aside from that, most of the other ones are in the 100 to 500 million range. So that space is getting crowded. So that's it for today. I hope that you guys learn a little bit more about these ones, and I hope that you enjoy me giving you these updates on the price and if it's a good time to buy or not and what the updates are, right? So I'll see you guys tomorrow. I'm going to be analyzing Lordstown. I like this company. I might open a position when the price bottoms out. We'll see. I have to look into it a little bit more, but we'll see the full review tomorrow. See you guys then.